Our team, the students you see up here, are all undergraduate students, and they were competing against teams in some cases that included MBA students, and some of the teams were completely comprised of MBA students. Also, very happy that we have won this competition 3 of the past 5 years. So we are very competitive. Thank you. By winning the local competition in North Carolina, the students get to go on and compete in the Americas Regional. The Americas means North, South, and Central America. So you think there's 360 schools that started out at that local level. 45 of them won the right to go and compete in the Americas Regional Finals competition. Our team then was one of those 45. So just last week, last Thursday, this group of students was one of 45 teams that started first thing in the morning in their competition. They did a presentation, presented their results, and they were judged. 16 teams were chosen to go to the semifinals, and our team was one of those 16. So you think about it, started at 360, and we made it into the final 16 from all of the Americas. So we're very proud of that. Unfortunately, they did not make it to the finals, did not win the competition. UNLV team won the competition. They did a great job. Our hats off to them. But I can tell you, watching these students and watching the various teams compete, our students are very competitive. Our students can compete, and our students can compete with anyone. I want to show you some of the schools they were competing against. The list of schools you see up here: Rice, University of Florida, Maryland, University of Southern California, University of Wisconsin. Most of those schools I just listed, their teams were MBA students. Now think about it, some of those schools are top 20 MBA programs, and our undergraduate students are competing against them. There is one thing that all of those schools that I've got listed have in common. They all lost to our students. Okay. So, as you can tell, I'm kind of proud. As we were awaiting the results last Thursday at lunch when they announced who was going to the semifinals, I have to say I haven't been more nervous than I can remember since my kids were born. That's how seriously we took this, and I am very proud of these students. They did a great job. It's a great group of students. Never had a group of students that worked as hard as these guys did. What they're going to do now is show you or deliver for you the presentation that they used in the competition, and you can judge the quality of our students for yourself. Thank you.
Well, thank you, Dr. Goff. We are the Appalachian State CFA team. My name is Alan Clark. On my right is Dan Alice and Ellen Morgan. On my left, Jack Gibbs and Matthew Vanek. We are here to recommend a buy for Family Dollar stores with a target price of $72.85. We believe the stock is a buy because of their growth opportunities, their position in the industry, as well as their valuation. Now, I'll give you a quick overview of Family Dollar. They're a deep discount retailer based in Matthews, North Carolina. They sell an array of products from toys to groceries with a target family of an income range of about $40,000 or less. They currently operate 7,600 stores in 45 states, which makes Family Dollar the second largest deep discount retailer in the United States. The first reason we believe they are a buy is because of their growth opportunities through store expansion and renovation. Family Dollar currently operates 7,600 stores with plans to open up 500 more this fiscal year. We forecast that they'll have opened 9,500 stores by fiscal year 2017, which is still less than half of what the company believes is a 20,000 total store capacity. We believe that this expansion is going to be towards the west, especially in California.
Now, with Family Dollar's aggressive expansion plans, our team wanted to take a look at where we felt like the company might reach a new store saturation point in the future. In order to do this, we took a look at the total number of both Family Dollar and Dollar General stores in each region of the United States. Based on this, we looked at the population in each of these regions and determined that the South was the most densely populated with number of stores per person. We applied a conservative estimate based on the South of 10,000 people per store to the other regions of the U.S. We then backed out Family Dollar's current market share compared to Dollar General and determined that the company has plenty of room to grow to at least 13,000 stores.
In addition to this store expansion, Family Dollar's existing stores represents opportunity for growth with its 8-day renovation program. We were able to visit some Family Dollar stores and tried to capture what we saw, which was a huge difference between Family Dollar's non-renovated and renovated stores. We felt like shopping at a renovated Family Dollar was like shopping at a completely different company. We are excited about this discovery because over half of Family Dollar stores have yet to be renovated. Family Dollar is going about this renovation program at an aggressive rate, with plans to update 850 stores this fiscal year. These renovations not only return value to Family Dollar's customers by improving the shopping experience, but also to the company, with renovated stores seeing a sales increase of 10%.
The second reason we believe Family Dollar is a buy is because of their competitive positioning and attractive product mix. We believe one of the keys to Family Dollar's continued success is their ability to retain the trade-down customer that they gained during the recession. During this time, many higher income families began to bargain shop, which we attribute to a shift in consumer psychology. We believe this value-focused psychology is a direct result of the decreasing median household income in the United States. As you can see, during the recession, the median household income decreased at 4.2%. Since the end of the recession, it has continued to decrease another 4.1%. We attribute this longer-term trend in decreasing take-home pay to the shift in consumer psychology. We would also like to note that the current level of around $50,000 per household falls within Family Dollar's second highest target income group. We believe that Family Dollar will continue to appeal to the trade-down customer by continuing their expansion of consumable products. These convenience products apply to shoppers who may be stopping in for the in-between weekly grocery visits. The company has also expanded their national brands products as well as their private label products to appeal to a wider group of customers. With increasing consumable sales, there are concerns about margins. However, we feel Family Dollar is fighting against these decreasing margins by increasing their private label assortment, by their new distribution center in Utah to access their West Coast expansion, as well as their new strategic partnership with McLane to streamline their supply chain process. When comparing Family Dollar to Dollar General, as you can see, when Dollar General was taken private in 2007 and since, they've been able to significantly improve their operating margins. If Family Dollar can close on this 2.7% EBIT performance gap, the company will see a significant upside in profitability.
The third reason that you should buy Family Dollar is for its defensive stock qualities as well as its attractive valuation. During the recession, Family Dollar outperformed the S&P 500 by 58.1 percentage points, generating a return of 21% compared to the S&P 500's negative 37%. When compared to the retail industry as a whole, Family Dollar outperformed again, consistently beating the industry growth rates. The company was able to do this because of their consumer staple product offerings that are much less vulnerable to economic shifts.
Given the defensive attributes of Family Dollar stock, we created a forecast model that yielded a 10.3% compound annual growth rate in earnings per share. Some of the inputs to our model include a 4.5% average comparable store growth rate, a 25% increase in the store count, declining margins across the board, and an exhaustion of the current share repurchase program. When looking at our 12-month forecast period, the model yielded an earnings per share of $4.18, which is 12.7% higher than the trailing 12-month metric. We then used 5 valuation methods to derive the 12-month target stock price of Family Dollar at $72.85. As you can see, we relied more on our multiples because we believe that is a more realistic market valuation for the company. We also wanted to include the discounted cash flow to provide some of the long-term growth potential for the stock. Our discounted cash flow was largely driven by a 7.7% compound annual growth rate in net income. That, in turn, was dependent upon our store forecast, which we embedded into our model. We also used a 3.1% perpetual growth rate for our terminal value cash flows. This is significant because it is equal to the long-term historical average inflation rate in the United States. Given the defensive qualities of Family Dollar and the 3.1% perpetual growth rate, we derived a 12-month target stock price for our discounted cash flow at $83.90. For our multiples valuations, we used justified inputs that were greater than the trailing 12-month metrics, though lower than the 2012 averages. As you can see, the trailing 12-month metrics were lowered in the past 3 months due to 2 significant price decreases. We believe that Family Dollar will rebound from the low trailing 12-month metrics, though not reach the 2012 averages that they once obtained.
After analyzing the company's financials, we believe that it is important to note that Family Dollar's return on equity has seen significant improvement over the past 5 years, and that it is currently above the industry average of 28.6%.
So although we like the quantitative valuation of Family Dollar, we also like their qualitative value-creating activities that they're engaging in. This includes their improving logistics through the utilization of their McLean partnership, as well as the opening of their Utah distribution center. They're increasing the amount of purchasing from overseas that they're bringing in from direct manufacturers to their global sourcing teams, as well as they're increasing the amount of marketing towards their private label items.
And through their employee training program, Family Dollar has reduced its inventory shrinkage as well as reduced its employee turnover rate. They have also increased store foot traffic with its appealing shopping environment as well as appealing consumables product mix with the addition of tobacco products. While all of these qualities make Family Dollar a strong buy, there are some risks to this recommendation. The first being economic uncertainty. The increase in payroll tax as well as rising gas prices have burdened the consumer, decreasing the amount that they can spend on high-margin discretionary items. However, we believe that there is an upside to this scenario and that there will be an increase in the number of trade-down customers shopping at Family Dollar as they look for value goods and to shop closer to home.
The second risk to this recommendation is the increasing competition that Family Dollar faces from big box retail, as well as the low switching costs associated with their industry. We feel Family Dollar will negate these risks through the convenience of their store locations as well as their store renovation program.
The third investment risk are the decreasing profit margins of Family Dollar that are brought on by the increasing amount of sales from consumable items. We believe that Family Dollar is properly combating this issue by utilizing their McLean partnership, by opening the Utah distribution center, as well as focusing on the sales of their private label items.
Because we are concerned with Family Dollar's lowering margins, we created an EBIT margin sensitivity analysis to determine that Family Dollar's EBIT margin would have to decrease 17.5% below our already conservative estimate of 7.2% before we would change our recommendation to a hold.
So in conclusion, we believe that Family Dollar is a buy with a target price of $72.85 because of their growth opportunities through store expansion and renovation, because of their position in the industry and appealing product mix, as well as their defensive stock qualities and attractive valuation. Now, at this point, we would normally take 10 minutes of questions from the judges. That's the scariest part, believe me. But we'd just like to take this time to thank you all for your support of Appalachian State, of the Walker College of Business, and most importantly, your investment of time and passion towards the students of ASU. Thank you.